Good afternoon, everybody. Sound check. How's it sound out there, everybody? You're going to have to listen to me for about 1 hour. Lucy and Charlie. Hey, John. Hey, Dale, Mark. Welcome, everybody. We always have the new people list at DTS is just like growing crazily. So welcome all you new people. I'm sure there's always some new people here. Let me put my email out there first. If you're new to DTS like this last month, or this is your first or second thing you've been to, just send me an email, say hello. Maybe let me know why you're here. You know, you're here at a free educational event about trading the markets. Let me know what you're doing, what's going on. Say hi, ask me some questions if you want to. Tonight's topic, just some great trades. This is a sleeper for me. Like this is to me is the most boring presentation I'll ever do. But unfortunately for most of you, it's probably great. It's also easy for me to prepare because I just throw a bunch of trades out there. I don't have to think about any great topics, even though I did kind of work one in here in the beginning. And it has to do with this line right here. Unfortunately, this is the most popular topic for some people. See where it says that there? This is the most popular topic. It says unfortunately. I sent an email last week, and I think a lot of you probably thought that I'd lost it or something because it was probably a bizarre email to some of you. But the topic is simply this. And I'm just going to mention it real quickly. You can read the email. I'm not going to go into detail, but I kind of allude to it in the opening slides here before we get to the first trade. Other than that, it's just 6 trades from the last 2 weeks, and that's all it is. But I guess what got to me a little bit was, I've been a big proponent of people who want to learn on their own. Go ahead. I tried to do that myself when I started, and I think it's a lot of advantages to you wanting to do that and doing it, and I even offer to help. The problem is I don't hear from a lot of people who are actually getting help, and I've come to learn, and this is probably my stupidity, that people teaching themselves translates to some of you as being, oh, I'll just go trade and figure it out. And I've heard directly and indirectly from a lot of people who lost a lot of money the last few months, just out playing on their own, And boy, that is not it. I mean, if you want to train yourself, you have to set up a formal training program to do yourself. And the stuff on the free stuff page can be an example of what you're shooting for. But it's not the training process. Just going out and trading, you have a 100% chance of not making it unless you do something. Train yourself, find someone you do like to be your mentor, use me as your mentor, but do something. You're not going to make it just goofing around out there. And maybe that's a point that I was maybe lax in saying, I always just say, if you want to train yourself, that's fine. But you have to train yourself, right? There's a procedure you have to go through. You can't just sit there and go, oh, here's some trades. I made money. I lost money. What do I do now? Here's the opening slide, the byline. That's what I'm talking about right now. Also, by the way, for those of you that are newer, the free stuff page I'm talking about is here. And when you're there, you can navigate to the home page if you want to. And also, it says on there, the Saturday Coffee, which was posted actually on Sunday, I think, very quickly, was our 100th event. Can you believe that? This is I don't know if some of you have seen this. I mentioned it before when I started a year ago, whatever, but it's on the top of the section on the free stuff page. It is about the prior events. And it's simply a catalog of every event out there. So if you don't want to go clicking around, here is the date, every topic, and a description, a quick one-line description of what it was and where you could find it, whether it's on the free stuff page or the archive page. So it's something when you click on that right now, you should go, oh wow, that's unbelievable. I never saw that before. Some opening comments. And here's the bottom line. I just want to take a minute and say this because I think I have to do this as a prerequisite anytime I show trades because I feel to some extent I'm doing a disservice. Showing trades and all the education material in the free stuff page at DTS has a great purpose. It shows you what can be done from technical analysis. That's the purpose. It confirms concepts for those that are trained. All the DTS seminar trained people have a requirement to know basically everything on the free stuff page because it's all good information. And it's a starting point for those looking to teach themselves. But it's not training in technical analysis. Why is it not training in technical analysis, somebody? I'm wondering if I'm just that stupid that I don't understand this. Why is it not training? Why is looking at trades, like what we're going to do today, why is that not training in technical analysis? It's like, to me, it's like the simplest concept in life, and yet nobody seems to understand this. I don't know why. No, no, it's not already past. I mean, you can learn from the past and learn to do something perfectly from the past. No, that's the same thing you're saying. Not in the moment, not in the past. I mean, if you have many things in life, if you want to learn them, you're taught how to do them by looking how it was done in the past, right? Nothing wrong with learning from the past. That's fine. There's there's a key word in what I just said there, and I emphasized it. Anybody want to take a stab at it? Maybe it's just me that looks at it this way. I don't know. But, well, the problem is you're not being taught anything. You're not being taught anything, right? You're being shown the final product. Here's a great trade. Here's another great trade. There's some charts, but if you're not trained on what you're doing, looking at a bunch of charts is kind of worthless, right? Because out of the you look at 4 different charts for one trade, right? Yeah, exactly, Valdez. That's exactly another way to phrase it, right? And I have an example here for you, but I mean, you look at a chart and you look at 4 charts. Any trade I do requires 4 charts to do it. And you look at all the variables on that chart, and then look at the permutations and combinations of those different things. For somebody who doesn't know what they're doing, it's just taking a wild stab at things, right? It becomes a process of trying and failing, and trying to work it out that way. So let me just, since apparently this is a sticking point, let me just give you this dumb example. It says in here you cannot reverse engineer, and that's exactly what Valdez said. Seeing it is different than learning how to do it. That's what it means to reverse engineer something. But you can't reverse engineer a complicated process. So let me explain that, because I use that term a lot. And I assume everybody kind of knows what it means, but let me be more specific with it. Your friend bakes the best brownies in town. When at dinner, you take the last bite and wrap it up in your pocket and shove it in your pocket. There it is. Last bite, putting a napkin, shoving it. You take it to a lab, and they break it down for you, so you know exactly how much of each ingredient is used to make the brownie. The lab is precise enough to not only know chocolate, but know what brand of chocolate. So you have this whole list of ingredients, right? But there's still one issue. You're not sure how to combine them or how long to cook them. But since there's only a handful of ingredients and only a few possible choices to combine them, you'll try each one until you're satisfied with the outcome. If there were 4 ingredients, theoretically, there could be 16 different combinations of ways you could combine them. I'm not a master chef. I like cooking a little bit. And I know in some cases it matters what order you combine things, right? You got to combine the eggs and the flour first. Sometimes you got to let it sit for a half hour. I mean, how would you know that just looking at the brownie, or even if you had the list of ingredients? How would you know necessarily how to combine it, right? There could be 16 different combinations. The only way to do it is go through and try all 16. If you talk about delaying, like maybe combining 2 things and then delaying the process, you get way more than 16 combinations. You got to try combining every 2 things, delay 5 minutes, 10 minutes, an hour. You really get to a case where you can't reproduce every possible thing. But let's get as close as we can. You also need to try different cooking times, right? Getting the list of ingredients doesn't tell you how long to cook. So you need to try cooking time in each of the combinations. So if you had 16 combinations, now you can guess the cooking time, right? I mean, you can cook something and say, okay, 12 minutes they're raw, 14 minutes they're burnt. So somewhere in that range of 12, 14 minutes is perfection. But where? So maybe you break it into 15-minute increments. So 12:15, 12:30, 12:45, and then you got to do each one of those times for each one of those possible combinations of ingredients. And you get to, 16 times 16, you're getting to hundreds and hundreds of possible combinations just to make brownies. Note that in this case, brownies are a physical thing, right? And finding the ingredients is easy. You take it to a lab, right? Dissecting a physical product is easy. But the procedure, you can't dissect from reverse engineering. The lab can't tell you necessarily what order they went together. So the procedure to do something is very difficult. Let me give you, so that's an easy reverse engineer, making brownies. That's an easy one. That's a piece of cake. If you wanted to make brownies on your own that way, you'd have to go to the lab, and then you'd have to probably take, a couple weeks in the kitchen reproducing. I'm talking about to reproduce exactly what your friend did, not something close, not any brownie. But what about this? Try to recreate something that's not simple and that physical, right? How do you recreate that, a statue? Somebody carved that out of rock. How do you do that? Well, here's your list of ingredients. Here's a big rock. And that's all you know. Right now things get a lot tougher. Okay, I assume I need some kind of instrument to cut, But what are my tools? I don't even know what my tools are necessarily. I'm talking without somebody teaching me, right? I'm talking about just with reverse engineering. There it is, go do that. Okay, some kind of chisel. I imagine a professional statue sculptor probably has dozens and dozens of chisels, I would guess. I don't know. I don't carve statues. Probably dozens of hammers and probably dozens of sanding tools, electric and non-electric. All kinds of tools go into it. But even if you had all those tools, even if I said, look, here's his workshop and here's a block of rock, what would you do? You know the finished product, but how do you get to it? And that's the issue. That's what you're doing here today with trades, and that's why I try and emphasize. I'm showing you the statue, if you will, and I give you indication of some of the tools to use, but how to do it and put them together is it's not even necessarily a question of holding back. It's a question that it would be like me showing you slides and saying, well, I'm going to teach you how to sculpt on these PowerPoint slides. You can't do it. It's a process that has to be taught. And I want to remind you, I like to bring this slide up every once in a while. What I believe that in trading is that there are three legs to the basis to every trader that are all equally, absolutely necessary. Superior technical understanding. Superior. Not reading some crap on the internet, which is 90% wrong, if not incomplete, but superior technical understanding from somebody who knows what they're doing. Math and probabilities are a big part of it also to me. Math and probabilities are key to put the icing on the cake of the technical understanding. And psychology and or experience. All the rest of it goes to waste if you can't take that knowledge and make money from it. And some of you understand that already probably. Here's trade number one. Now the only thing that took me a little longer is I set up kind of a new format to show you some trades. I thought it would be, I don't know, I always try and look for different formats on things. I try to make a little more educational one here that walks through things a little better. So there's 6 trades and we have 44 minutes. So that's 7 minutes per trade. So feel free to ask any questions that you want. And I said I was going to pick the best ones of the last 2 weeks, both in terms of, obviously the nicer winning trades are part of the great word. So they're some of the nicer ones, but also to me some of the more ones that I like, ones I was kind of proud of, like here's a great strategy played through perfectly. I should have had a couple more from today, but I'm frustrated from today because I just kind of mismanaged today. I could have had 4 days profit, really respectively easy. I ended up breaking even, or no, actually I lost a little bit today, just kind of mismanaging, and maybe misreading one. Cisco was tough today, but that's what it was. So there's nothing from today. But this goes back, like I said in the slides that were sent to you, it's going to go back over 2 weeks. And so that goes back to yesterday is a trade and then going back 2 weeks. So I'm starting backwards in time and going forward. So here's Jenny from 7-6. So what you're looking at down here, this is on all these slides, they're all set up identically. This is the daily chart down here. And then you have the 60 and the 5 and the 1 in most cases to show you just the entry. Now I'm not a scalper. Most of these trades, the better part of them are held for a half day or something. But to perfect entries and exits, I come down as small as I need to, and often they are coming off the 1 minute chart. Something you can do, Wave, thanks for that input. Maybe it's not the best format, but you can take in the top of your screen, everybody, and right now would be a good time to do it. You don't need to see the chat, and blow up your screen so that it is like a YouTube video. You can blow it up to fill your whole monitor. Can you do that? And for most of this, you don't really need to read the numbers. You just kind of need to see what's going on there. So let's continue. So Jenny was, I think it's the only gap trade that I have on these 6 slides, if I remember correctly. Jenny was an actual full-fledged gap. So here's the daily chart down here. We're going to open and just clear that area right in there. Did you need to clear that? Not necessarily. We did. For other reasons on here, this turns out to be what I called a tier 1 gap. So that's what it looked like after the day of the trade. Boom, we get that big green bar, which is obviously just what I want. I did not handle this all that great. I mean, it's a great gap and I made money on, but I left a lot on the table on this. So there's the daily chart, and now I'm going to cover up the daily chart because all we really need the daily chart for in day trading is to say, does it approve this trade? Now, a gap comes from the daily chart. A gap only is on the daily chart. So there's our concept. We have a tier 1 gap, so now we want to get into this. So on the hourly chart, that top left there, whoops, and here's the numbers down here then. So this is entered. I didn't get this out of the gates this day. I forgot why. Maybe some in the room remembers. I fumbled. I tripped. It took off. I don't know. I would have got it if it took off. I don't know. I don't remember. I don't think I knew it was open. Oh, this is the one I did. It wasn't opening this high up initially. It was opening lower, and then it crept up, and I didn't notice it. So I took the pullback. It's at 1047. You can see the numbers here long. Can you see my arrow? Yeah, you can. That's funny. I can't. So you can see the numbers here long over 645, stop under 620. And it's split in thirds because there's three different targets, and it was 1/3 taken in each target. The best target was 2.4R. They were all pretty good targets. So let's see what happens here. So we're gapping in here, and you can see that big topping tail in there. Boom, 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 was the initial rally and the pullback. There is that hourly chart. We had this big run up and down here. So the hourly chart is just kind of saying, hey, here's a pattern that happened today. It's not showing the entry or anything. Here turns out to be the entry on the 5-minute chart. Now I'm going to start asking you guys some questions, mostly just to get you thinking kind of. The entry came right off of here. The entry was over 645. So you can kind of see it in here. You can see it was very much right off the bottom there pretty much, almost exactly off that tail right there. So the question for you is, that broke the low of the day. Is that bearish on a gap to break the low of the day? When you gap up and your reference point is that opening bar, is that a critical support area that you need to hold? Yeah, the opening area on a gap is meaningless. It's just a random area the price is open. Now, it's not to say some people might not have a stop held there or whatever, but if you think about it, pre-market's trading, and boom, the market opens, there we go, and prices take off. There's no reason that that's support. Why is that support? All that is a novice concept would be to put your stop there. And what I actually would like to see to go along is to see the low of the day broken in many cases. Why is that? Can you think of a reason? And these are the things, that I want to point out, like if you're reverse engineering how to trade, these are things you would probably not ask yourself or think about or come across for, days and days, weeks and weeks, years and years of practicing on your own. Why do I want to see the low of the day broken? Level tested. I guess that's a good way to phrase it. The level's tested. But here's the question, right? Your fear that low of the day is going to bring in sellers and drive it lower, right? Well, what we've done is we've opened the door, right? We said, okay, all you bears, who thinks this is a weak pattern? Who wants to short? Well, a handful of people stepped up and then they got slaughtered. That's what I want to see. It's like you get to ask the stock a question. If you show weakness, are people going to sell you or short you? And the question was asked, the question was answered. No, we're not. And that's what I want to see. Because if you get in before that happens, like if you try to get in here, you see this little topping tail here? Then, like somebody just said, they stopped out because they went under the low. You're playing really tight and you go in on some bullishness and then you stop out all the time. So it's not the way to do it. So I end up getting in on that little shakeout, if you want to call it that. In this case, I wouldn't even call it a shakeout, though. I would call that the expected pattern for a gap and just a normal type of buy setup. So got in there. Congratulations. Great. As long as the 5-minute chart is here, I ended up getting out of this in here. And I didn't want to do that. The intent was to hold some of this end of the day. I got botched up on my second target because I got nicked out of it for a penny, and then when I went this high up, I said I got to take the third target, and that was kind of mishandled. It was a great trade, obviously, but should have been another 50% more profit if you really played it properly. And then here again, showing just on the 1-minute chart, I'll just show you that entry. There's that big bar. Take a look at the volume that came in there, which is good to see, because that turns out being just a little shakeout. Now, the other issue is, if you notice, I got in, just right off that tail, basically, right? So you have to trust and know. It's not like I waited until anybody could wait till you're up here and say, well, and actually this turned out to be a great entry right here if you waited for that and took that. What's the problem with always saying, hey, I know what I can do. Just pull out this. What's the problem with always waiting and saying, hey, Paul, that was even a better entry and probably less risky, whatever that means. What's the problem with waiting for that? Yeah, it may never happen, right? I mean, what happens if this right here just went like this, right? And this is that balancing act you always have as a trader that you can never get away from, is to act quickly and aggressively and be in the trade, but maybe have a greater chance of stopping out, or wait for more confirmation and then understand you may completely miss the trade. How do you make that choice? How do you make that choice about whether to jump in down here or wait and hope and pray that you get this? How do you make that choice? How do you make that choice? Kind of a key to understanding how to trade, isn't it? Exactly, Mark. My phrasing was going to be through a superior understanding of technical analysis, right? You have to do that balancing act, right? You have to sit here and I said, you know what? That's the low. That's it. Time to get in. Somebody else maybe understood charts as well as I do, but didn't want to balance it that way. Just wanted to say, hey, I'll wait for that. If I miss it, I don't care. I don't think that would have been the smart move on this one because this was a tier 1 gap. The reason this is here is because it's a tier 1 gap. We only see one of these a month probably, maybe 2 a month during earnings season. So that's why I made the top 6 for tonight. But in truth, these big gaps are not my favorite types of trades because they lack what I call precision. Now that's just a personal preference. There's nothing wrong with loving big types of gaps. They're a little different critter. This one was, I said, such a powerful type gap. And if you take a look at the chart, and here the hourly chart is maybe a little helpful. Can anybody describe for me, just kind of, I'll use the word language of charts, why this was especially maybe a great gap? Can anybody kind of describe just in a quick few words, just try and take a few words, why this was especially good? Remember, when you understand charts, your goal is always through combining 4 different time frames. So we'll look at the chart and say, who wants to buy the stock today? Who has to buy the stock? Who wants to sell? Who has to sell? What can you determine from that analysis by looking at that chart? Pull back to support. No, Mark, not what I really would have called that at all. I think that's the wrong view of that, to be honest. You normally get the right answer on all these, but I think that's the wrong view totally. I'm waiting for Valdez to finish his answer, give him or her a chance. Shorts had to cover because of the gap. Well, I mean, that's always true in any gap, Valdez, true, but maybe especially true here because wasn't this kind of a bullish breakout this day, everybody? Wasn't that kind of a bullish breakout? Anytime you gap over red, you're trapping traders. I mean, anytime there's a red bar, you're trapping some traders. But what my point is, isn't this an exceptional trap? Didn't the whole world jump into this day? Isn't that the most bullish thing in America, right? And then everybody who got in this day had to get out the next day. And you know what? Possibly that whole week's worth of consolidation ended up getting out, right? And or even shorting the stock, right? Because it looked really bearish at the end of this day. So anybody, number one, who was short had to get out, right? And think about all the longs that have been waiting for the stock to move that got out, so maybe they didn't have to get back, but they wanted to get back in because they got knocked out of it. So there was a lot saying that this is going to have a big bar, and it did have a big bar. If you go back and look at that daily chart real quick, look at that bar. I mean, that thing is just huge. It's 4 times any size bar. And that's the nice thing about trading special patterns is that when you get them right, a lot of times. Somebody asked me the other day if I use ATR, and I said, no, never. Who cares about ATR? It's a dumb concept. I can see ATR in a chart, and most of the charts I'm playing, I'm not going to sell at the ATR. I'm going to sell where I think it might go. So even though I didn't get all of that, I got 3 times what the ATR would have been. That's average true range for those of you from Oshkosh. All right, so there we go. So there's Jenny. The next one was Tuesday, the 11th, and this was Nike. Nike down here, we can see the daily chart. And the reason it made it on, now Nike was a stock, and I phrased it to the room, this is one of those days when I sent the watch list out the night before that I was thinking about Nike the next morning. It was one of those, well, I temporarily kind of forgot it the next morning, but this is one of these, kind of heart stop beating, wow, can't wait for tomorrow type of trades. So number one, it's on the watch list. It makes it to the watch list because the daily chart came off some support area. Now, that's not a great daily chart. I don't think it's a swing trade. I just simply is we reacted to an area and we're likely going to get a bounce from there from the higher time frames, from people who think it's a long, from people who are covering their short at the prior support area. So the daily chart was a big thumbs up. And then and we're just going to open flat the next day, basically. We open up down just a few cents, which ended up being very nice, actually, to this. It kind of turned out to be kind of a critical thing the next day because it made it very, very nice. So there's the daily chart done. Here's our two targets on Nike, entry over 105.95 and stop under 105.50. So pretty snug stop for Nike, 40-cent stop. But that's what was justified here. So here we're going to look hourly chart. We're going to open, see it now, and this part of why it's on the hot list is because this hourly chart. This is just, to me, it's a beautiful hourly chart. Because you put in your first higher low. Remember, this is the daily prior support area. You put in your first higher low and it reacts to that by blowing through with that big green bar. Nice little support area there, blowing through with the green bar, consolidating. And now the next morning, I'm sorry, you can see some of that green bar. The next morning here, we're going to open just under that prior high a little bit, which was nice because one type entry you could use would be to see it come up over the base from the prior day. As it turned out, it gave me an extra special entry. And this is this is the opening minute. This is just seconds into the day. You see that right there? It ran up and pulled back that first minute, and it was over that tail. So actually, it's the second minute of the day that I actually got into it. Has a really nice pop, and I really should have taken something here. This is the morning I was doing 3 trades the opening 5 minutes. So I didn't take anything there because I was busy. In hindsight, I wish I did. As it turned out, it was fine that I didn't. But that was a nice pop, and then you get this pullback in here, and I ended up just raising my stop in here. So if I could have sold some here, I might have bought some more here. And it ends up with, obviously that pullback here is this pullback here, ends up with a very, very nice move. So it was described as a 60-minute major support, a daily major support, a 60-minute DTS breakout play, 1 minute secondary sign of strength for the entry. One of the reasons I like the morning, and again, this is my preference, I think what's right and wrong. As a day trader, you should not be at the screen more than 2.5 hours a day. Anything more than that is wrong. What's my preference? I like the opening half hour, because I think you find tremendous number of focal type opportunities events. The problem is, as the day goes on, it's easy to look at this chart and say, oh, what a strong stock. I would have just bought that if I started my day at 11 o'clock or at 12 o'clock. Well, yeah, okay, but number one, it doesn't make that much. Number two, these things stop out a lot. Number three, this one wouldn't have worked. I mean, how do you know, what I mean? You start to get in this tough area where you're saying, that's already a huge move, and now you're still playing it long. To me, I like to get in at the birthplace, right or wrong, and then be able to say, all of that is my move, or whatever I can get of it. And just a matter of how much profit you're making, not if you're going to try and get in at some crazy level like that. I had no special notes on these, so I'm just going to keep going through them. If you have any questions, let me know. That was my second favorite there, Nike, and that was just a beautiful watch list stock. Just a textbook thing. Daily chart, hourly chart, opens in the right area, has the right market bias, gives me an entry. All these things have to come together, and that's what makes Nike a nice trade. So it made, 1.5 times the day's goal, and the last 2/3 was sold up in here somewhere when it broke this pivot. Right up in here, yeah, right up in here somewhere. That's where that final trail was on that. I really wanted to hold end of the day, but I walk away a lot of times, and when I came back, I had come off this high, and I just put the trail under this pivot here. So it gave back a little bit. I think that was just fine. Cisco on the 12th, a week ago today. What a coincidence. Cisco on the 12th. Daily chart of Cisco, is that the right daily chart? We're going to gap down this day. See, that green bar is yesterday. We're going to gap down this day. So here we go. We gap down. The big red bar was the day of the trade, and the next day you can see it flip back green again. Cisco's been kind of crazy. So we have again, this is another gap. I thought that the other gap, the Jenny, was the only gap, but this is another gap. So on the hourly chart, it's going to show up here. You're going to see the entry here. This is a one target trade, and I left a lot on the table. 51.77. So we're going to enter under 51.78. The hourly chart, the gap is going to come to here. It's going to clear that little hourly pivot. I'm sorry, the gap is down to here. The gap opens here, but it ran back up. You can see that topping tail. So this was shorting that run up. And again, to have the confidence to do that, 5-minute chart, short right in there, under 51.78, stop over 52.05. And that ends up being a short right here. Now, full disclosure here, I tried this early, I forgot where exactly, and I took a partial loss. It was a 1/2 or a third loss. I think it was a half loss on it, with the intent of looking to get back in. The way this set up, once you hit this, somebody emailed this to me, I don't know if he's here or not, but the old Tony Orlando, knock 3 times. You come up here, and that's not a real thing. It's just a fun thing. But you come up here, and you keep testing this, and at some point, you got to be worried about the break above. Now, this is a very bearish gap, but you have to look at what's going on today, how it's being reacted to. The reaction was, not sure what's going on here. This should have been in free fall mode. So I got out and then looked for a sign to get back in on some weakness, which came from a smaller time frame. But I just want to see that this thing wasn't going to power up to the prior high up in here somewhere. So even, not the 2 trades, it still made like the day's goal. And I just like this lot because this ended up having a huge free fall. You can see this 5-minute chart here. And we fell so fast right here. I took the whole thing because I got a perfect entry. We fell like a lead balloon right to 10:30 reversal time and then put in that green engulfing. So I got out, and the intent was to get back in. I took the whole thing, which I normally don't do. I normally take a half or a third. The intent was sell it all, get back in, but you can see what happened. It just flipped around and went down really quick again. So this trade had, I think I figured it was almost a whole week's profit in it if you just sort of walked away to the end of the day, which is something I keep track of all the time, is how would I have done if I just would have left this alone. In general, I'm doing the right things. There's a Cisco where you lose money by managing it, but there's been several other trades that I did the right decision by taking profits or getting out a little bit early. But you always have to monitor that because a lot of times you leave too much on the table. So Cisco, 5-minute chart, 1-minute chart, boom, boom, boom. That's Cisco. That's Wednesday. So that's number 3, I think, right? Number 4, LCID. Just a beautiful, beautiful little setup. Lots of little points on this one. Made the watch list because the daily chart was that. Again, we're not trading the daily chart, so you don't have to love it. We just hit an area we reacted to. We have a big red bar. That big red bar is this day right here. And note that I think we had it on the list, and I gave it a no-go on this day. I gave it a nope, don't like it, because it had just dropped too much with too little consolidation. This is kind of a guide for that, to check that out. So it was a no-go for me that day. But I had a notice the next day again, and this is the day I really liked it. So here's the day of the trade. It looked like this. Before the trade, you can see our entries here, and we're going to open inside the base. And here's, the perfect type entry that is, shorting the top of the base. So entry here under 714, stop 731. On the 5-minute trading price, see it a little bit better? We open, put in a big green bar, and I short the top of the big green bar right up in there. Obviously, just a perfect type entry if it's right. Now let's pause for a minute here for 2 reasons. For all of you that joined late, let me just give you a couple links to the free stuff page. This is a little catalog to prior events. We just hit our 100th event posted on the free stuff page. Here is the free stuff page itself. I started off talking about the concept that I have been frustrated that traders who I said I'd be willing to help them in the process, the journey of them teaching themselves if they prefer, but nobody is teaching themselves. They're simply trying to reverse engineer stuff which doesn't work. So let me ask you some questions here. You're going to reverse engineer this trade. What did you learn from this that you're going to reverse engineer? That anytime a stock rallies in the morning, you short the top, well, you're going to lose a lot of money doing that. Anytime you have consolidation, you short the top, well, generally speaking, you lose a lot of money doing that too. Any red bar, you start shorting it. I mean, there are many, many, many things that come together. Just to emphasize, I think most of you know this. I look at about 1,400 stocks every night, morning in preparation for the day trading day. I look at a bunch of daily charts, I look at a bunch of hourly charts, I look at all the gaps in the morning, and from that whole list, I create a watch list that some of you get that is maybe 30 stocks, 1,500 stocks. There's only 30 that I'm remotely interested in, 35, 40. And then from that, in the room, we together make a hot list, which is usually 3, 4, 5, 6, 7 stocks. So out of 14, 1,500 stocks, we're looking at 7 stocks in the morning, right? That right there is probably the biggest indication to me to say, hey, there's a lot that goes into each of those 7 stocks, obviously. It's not cookie cutter crap that you read about. It's a real understanding of what you should be looking for, combined through 4 different time frames, combined with the right market timing, the right type of open, the right relative strength or weakness, all this coming together. It's a lot of stuff that you have to think about. It's not hard to learn, but what I want to really keep emphasizing to you, those of you learning on your own, is you have to train yourself somehow. You can't just go trade and just hope through the process of osmosis it sinks in. It never will. Trading has too many variables, as you can see from these charts. I don't know how you would just reproduce that. So entry, and from there it's fairly much a piece of cake. I got out of this by noon, so this is pretty good management. It did go lower. This type of move I'm not at all mad about missing, because you have this much move and you only drop that much more. You know, there's a certain, I don't know if you want to call it after the fact reward to risk, but when you're down here and you're saying, you know, is it to get this, is it worth it to give it all back? No. So I think the targets on here take in around 7, 680, 690, spread out between 10 and 12 o'clock all through here. I think we're good targets in that case. That's not expected value, really, or at least in my mind, but of course I usually think kind of stupidly, but it's, to me, it's, I guess, the progressive reward to risk ratio, you know. You're down there, you're up twice today's goal. It's not likely you're going to see a much bigger drop. It is quite possible it reverses, and that's something you always have to balance out, you know. You can't take it to the extreme, or then you get into this thing where you're always taking cheap profits and saying you can't go broke taking a profit. But when you hit, you know, a number that is already exceeded by 2, the expected move for the day, you have to start protecting some of that. And that's what I think you should do when you manage, is protect profits. What do most people do when they manage? Most people, well, I think when you manage, you should be trying to protect nice targets. What do most people do? Yeah, well, they try to minimize losses or protect very small profits, right? Which is guaranteed a losing way to trade. All right, so that's LCID from Friday, the 14th. That was a fave. Note something also, and I don't know if he's here, but a really good trader in the room was not here for this trade this day, and he was mad because he had been actually kind of following this with me the last 2 days. Is the daily chart? Yeah, let me go back to the daily chart here. The next day, I had no interest in this. Oh, I didn't have the little bar come off of that. Shoot. Well, the daily chart went up the next day because it's kind of threading the needle here. This was a great short, I felt. But you can see now we get this conflict. Now we're coming into an area on the daily chart after that day. So the next day, off the screen, no interest. A couple people in the room still had interest in this. I said no, and it did not work for them because you're now conflicting on 2 different time frames. You want everything flowing the same direction. You kind of want the people who are maybe running funds to be agreeing with the people who are swing trading, to be agreeing with the people who are day trading as much as possible. You're never going to get 100%, but you don't want to be fighting them. All right. Target, Monday the 17th. This again was one of these I've been watching for a while, and I thought this was just a technically perfect type chart that a lot of people may not have agreed with, but I think this is like as good as it gets. Here's the daily chart, and again, this is before the day of the trade, so this is what I'm looking at when I put it on my watch list. And the goal this day was to see if we could get this to kind of puke lower down to the bottom of this base. Now, a couple of words on that. Whenever, for those of you not in the room, every long that goes on the watch list or the hot list or the intermediate list, It's one of two categories. It's go long on strength or go long on weakness. Same with shorts. Go short on weakness or go short on strength. So this is a go long on weakness. So it goes in a certain area in my platform so I can just look and see it. And I wanted this to fall to that prior level down here. Now, to me, this is really super special because you don't see the weekly chart here, but this is holding a prior weekly low from way back when. And then we hold the daily low. And here's the big thing to me, right? This. Why is that such a big deal? Why is that such a big deal? Just English words, language of charts, who wants to buy, who has to buy, why is that such a big deal? No, not trap shorts really, not in this case. And keep in mind, this is not me, after the fact, giving you a history lesson about some chart that worked and explaining. I never do that. This is a trade I did with the room. There are people here from the room. It was just this Monday. And everybody knows I've been watching Target because of that base right there. No, the base didn't fail. The reason is because it refused to come back down to here, right? Here's your quote-unquote support level, whatever that means, right? You retest it. So you have this free fall, right? You have a little bounce and you retest it. You bounce above this level, right? And now here's the big question, right? I have a question for you, Target, and all you people that trade Target. Here's my question. Are we going to come back down to this level? Well, guess what? For 3 weeks, somebody stepped up to buy it up here. What does that tell you? What does that tell you when you have a base that holds above a support level? I'll draw it down here. If you're squeamish, you better turn off the sound for a minute. Hey, that's not too bad. Look at that. Well, even more specifically, what does it tell you about the big players involved? Boy, that's some good drawing there. It's not a dolphin. Yeah, more specific though, Dale. You can tell them something more specific than that. Those are alligators, exactly, right, Art? This is a rabbit that somebody's hanging over a Florida gator swamp. And as the alligators get hungrier and hungrier, they jump higher and higher to get the rabbit. And that's the explanation, right? Not just the level. Well, the key word in there, Kevin, is they. What if there was one big money person that was going after Target? What if just the Police Benevolence Fund of Cincinnati, they decide, hey, we're going to pick up 4 million shares of Target. And it pops up to here. What would they do? They would stop buying it, let all the idiots like us, fail and have to sell it. And when it comes back down to here, they'd buy it again, right? Why wasn't the Police Benevolence Fund of Cincinnati able to let it come down to here? Because the Boston Rockets Retirement Fund, mutual fund, said, hey, we like Target too. And we're going to buy it up here. We're not going to let it get it. So in other words, there's competition going on. There's more than one name chasing this. When you see a tight little thing like that happen or something start to grind higher, it's because the alligators are jumping up higher to bite at it. So that's just simply a big sign of strength on the bigger time frame. Now this is, well, actually this is more than a day trade, but this I'm showing you here's a day trade. This is great across all time frames. So when you come back down to the bottom of this base, and this is where to me people make mistakes, and it's really stupid to buy the top of this base because even if you go above the top, you're going to be back down at the bottom probably. So I want to see us come down to the bottom of the base. So there's a lot of explanation for one dumb trade, but there's that support level, boom, 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 goodbye daily chart. So that support level, you can see the numbers there. This support level in the daily chart is that level there on the hourly chart. That's a prior low you're looking at, right? So we open, and guess what? We puke lower. Puke lower. Nothing better than puking lower through support when you feel that support level is strong. Now, again, the average trader would probably say, oh no, we just broke support, let's short this. Well, that's why the average trader loses all the time, because that's not the case at all. As a matter of fact, I had the understanding, the nerve, whatever you want to call it, to buy that tail down there. So hourly chart, boom. 5-minute chart, you don't see much there. Got it right off the bottom. 1-minute chart, right there is where I end up getting in right there on the 1 minute chart. So this is not out of the open. This was about 9:45, a little after 9:45. And could have probably gotten in better, to be honest with you. Things move kind of quick in the morning sometimes, and I missed, you can see how quickly kind of that popped off the bottom right through here. I think I would have wanted to get in earlier if I could, but it popped, put in that tail, I got in over the tail right there. So that turns out to be an okay trade. The problem was with that is that it didn't follow through on this day. I took, you can see the high on the 1 minute chart here is approximately in here. I took a target in there and then the rest of it trailed out in here somewhere. So it was never a huge move. It wasn't ready. Well, it held the low, but it was still getting selling from up above for whatever reason. It had dropped on the daily chart all that time. So come back the next day and guess what? Target again, right? Why would you get rid of it? Go back and look at this. Why would you get rid of this pattern that now has this 5 minute pattern on it, right? Sitting above those prior daily lows, right? So the idea here was, hey, maybe we get that, some kind of pattern happening in the morning the next day. Well, guess what happens the next day? So this is the same chart, just a day later, right? So here's what happens that next day. It's kind of hard to see the daily, I know. But here we go on the hourly chart again, that we have yet another, right? This was the 17th here, and here we're going to do it again on the 18th. Now this I would call, maybe you could name this differently, just call it a retest, that prior low, whatever it is, but to me it's the same thing. So we have this great support area, you come flying into it, 9:35 reversal time. There's a reason that happens at 9:35, and I end up getting in again right off the tail down there. And this one here is right in here somewhere. So over 129.45, and stop was about 50 cents. And this one had a great target too. Now this one moved that day. This one really moved. Can't fault target 1, target 2. My only problem was I let the target 3 go for a trail out where I maybe should have locked all that money somewhere higher. Wasn't my best week or two for management. Great trades on the screen. Stuff's been flying. I'm just not always picking the right one. Things have been fine, but I just feel like I've missed some of the super home runs. So there's target 2, which was on the 18th. Oh, that's 6 trades. That's it. That's it. And it's 6:55, 5:55. I'm confused today. I don't know what's going on. Questions on any of this? And if you missed my introductory comments, it was, I think this is a boring presentation. A lot of people think this is the greatest because you like seeing the trades. But I just want to emphasize the trades are the final product. And even with my comments, I understand that people that learn this, have an initial learning curve of maybe 30 hours of stuff to learn. But you don't learn it sitting there one time. You have to practice, go do this, go do that, come back and relearn it again. I have what I call a 100-day schedule. I can show this to you. It's actually on the, it's not on the free stuff page, but it's on the seminars page. And this is kind of a guide I give to students, and you can look at it. It's just a rough guideline if you want to, to train. And for those of you who are looking to train yourself, I suggest you base a lot off of this in terms of time and procedure. I have to tell you though, I've warned you that training yourself is a difficult job because you're your own teacher and you don't know what you're teaching. So it's a special person that takes to do that. I'm willing to help you, but you have to get a hold of me, email me. I can guide you through some things to do, look at some trades, tell you when you're going the wrong direction, whatever it is. Or of course you could just sign up and get taught, whatever you like to do. How to get great trades. Hard to get great trades in Great Man. Well, maybe that's a funny way to phrase it. Sometimes, yeah. There is, but that's why I like the walk away, Robert. I haven't, we've had some great trades. The last month, I sent around was great in the room, was over goal. For this month so far, I'm just green, but not killing it. We've had the trades, and this is I think the last 2 weeks where I've just not been having the best management. That's why I like the walk away though, Robert, is because you're exactly right. There's that inverse relationship that when you have a great trade, people then just take it right away, right? So you have your losers, then you have the trade of the week, and you don't get much from it because you don't manage it properly. And that's why you have to kind of do the reverse. You have to look at the possible good trades and get some good money out of them. I don't think. No, I'll leave it at that. Any questions, anybody? 100 presentations on the free stuff page. I suggest you look at the free stuff page when you have a chance. We're in the middle of summer. I know a lot of people are gone. I know a lot of people in the room are taking off for the summer. We're at about probably 2/3 normal attendance. They're still around. They're just taking off. And I also, kind of tell by the interaction I get from new people, everybody's kind of chilling for the summer. Can I debate Jenny here, or should I send you an email? Debate it. Tell you what, you got 3 minutes to debate it. How's that? What's the debate, Jay? I'm curious what Jay is going to debate. Well, I think he asked a question about what he's going to debate about Jenny, because it's probably the clearest cut trade out of all 6 that I showed you. It was tier 1 and set up a range for 1 hour. It broke that at 10:45, not like 9:35 or something, so I don't think it was meeting its breakdown. It did fail setting up a great trade. So this is just a question about whether or not that 5-minute setup right there was a failure or an expected. I don't really agree with you, Jay, because I don't care what time it happened. It's the first time it was tested, right? I mean, it doesn't matter if it happened. The point is, when this opens, why is that support? It's just a random mark on the chart, right? It's just a random thing. There's nothing other than self-fulfilling prophecy of the low of a bar. There's nothing about it that says people have to buy that there, right? It's just a random spot. So we run up, and we fall. The thing is, on a gap, you don't know where support is. You don't know. I mean, when you have a bullish gap, here's an area, and if a stock that gaps up a lot, and it's a very bullish gap, but it gaps a lot, well, it may do this, but the point is you do not know where that will be. There's just some area where that little balancing scale between the bulls and the bears tips in favor of the bulls, because prices come down enough that the bulls are willing to buy it, prices come down enough that the bears who are selling it don't want to sell anymore, and it's a magical spot. You don't know where it is on a gap. There is no reference point. And I think that's all that is here. There is a little line there that says, hey, here's what a lot of people are looking at, and a lot of people may have their stops there. So my only point was that I know that if all these stops hit and it goes nowhere, that's great. So it's semantics, I guess, whether you want to. I guess your point is that you think that is support and it was a failure to go lower. I think it wasn't support, and the breakdown just from stops as soon as it done was more of a shakeout. In other words, I would call it more of a shakeout than an actual failure. A shakeout's not really a failure; it's what you would expect from it. But good point. It's semantics though, because at the end of the day, the only difference would be is I'd be very aggressive getting into that because I treat it as a shakeout. If what you're saying is true, Jay, okay. But what you're saying is true, then if you're true to your word, you didn't get in then until up here somewhere, right? You didn't get in until then. Because you had to let it prove itself. At 653. Yeah, well, that's about where I pointed. I probably pointed at 655. So you got in over that base, yeah. Okay. So that's the only difference is you wanted more confirmation. I said, good to go. All right. Good discussion though. All right. Thanks everybody. If you're in the room, we'll see you tomorrow. All right. Have a good night.